Some people think you need $25,000 just to swing trade. Others think you can start with, just a couple hundred. So what's the truth? And how much money do you really need to get started? I'm here to clear it up, right now. In this video, I'm going to answer one of the most common beginner questions. How much money do you actually need to swing trade? We'll break down minimums, realistic expectations, and what you can do right now to start small without blowing up your account. First off, you do not need $25,000 to swing trade. That rule applies to pattern day traders, people making multiple day trades in a margin account. But swing traders? You're holding trades for days, sometimes weeks. That rule doesn't apply. So if that number scared you, take a deep breath. You're good. Now that we know we don't need $25,000 to start trading, how much do we need and still end up being successful? The truth is, you can start with as little as $500 to $1,000. But there's a trade-off. Smaller accounts limit what you can trade, how many shares you can buy, and how you manage risk. Realistically, if you want to have room to grow and manage your trades properly, a starting balance of $2,000 to $5,000 is a sweet spot for most beginners. It gives you room for diversification, flexibility in trade sizing, and a better shot at growing your account sustainably. Here's something most new traders overlook. The type of account you use matters. There are two main choices, margin and cash, and each one comes with its pros and cons. A cash account is the simplest and safest place to start. You're only trading the money you actually have. No borrowing, no interest, no surprises. It's great for smaller accounts and easier to stay disciplined with. The downsides? You have to wait for your cash to settle after a trade, usually 1 to 2 days, which can slow you down a bit, You also have no leverage. Your buying power is limited to your cash balance. Bottom line, it's perfect if you're learning and want to protect your capital. A margin account, on the other hand, lets you borrow money from your broker to buy more than your cash balance allows. So if you have $2,000 in your account, you might have $4,000 in buying power, depending on your broker. This offers more flexibility and faster trade execution as you don't need to wait for the cash to settle. It also allows you to take larger positions and short stocks. The downsides? You're trading with borrowed money, so losses can snowball quickly and you pay interest on borrowed funds. There's also the possibility of margin calls if your positions go against you, and that is not fun. Finally, margin accounts can be risky for beginners who haven't nailed down their strategy yet. Okay, what's the bottom line here? Margin gives you more power, but also puts more pressure on you. If you're not careful, it can magnify your losses just as easily as your gains. My take, if you're just starting out, a cash account is usually the better choice. It forces you to trade with discipline, keeps your risk in check, and gives you time to develop your strategy without the extra stress. You can always switch to margin later once you're more confident and consistent. So yes, choosing between a cash or margin account matters, but here's the truth that most beginners completely miss. Your account type and your account size aren't what make you successful. They help for sure, but they're not the deciding factor. What really matters is how you trade. You could have $500 or $50,000 in your account, but if you're trading without a plan, chasing random stocks here and there and risking too much on each trade, that money won't last long. On the flip side, I've seen traders start small, just $1,000 or $2,000, and slowly grow it by trading only the best setups, managing risk like a professional, and staying consistent with a proven system. This is the stuff that actually builds momentum and confidence. So instead of asking, how much money do I need? The better question is, am I trading with a system that works? Because account size might get you in the game, but your strategy is what keeps you there. If you've been wanting to try swing trading, but you're overwhelmed by where to start, this is exactly why I created my free email series. It walks you through the process step by step, from choosing the right account to finding quality trade setups, managing risk, and building a repeatable plan. No jargon, no hype, just what actually works. Just click the link below to sign up. It's 100% free, and it's designed to help you start swing trading with confidence, no matter your account size. And if this video helped in any way, hit that like button and subscribe for more swing trading tips and real-world guidance. And I want you to comment below, what's your starting balance goal? I'd love to hear where you're at. And thank you for watching. I'll see you in the next one.